Meet the Lot, native token of Lukki Exchange and the most potential tool for investing this year. Trade now on P2B, B2B and Lukki.io.
I just checked CoinMarketCap, and in the last 24 hours, Tether has traded over 30 billion, right? It's the most actively traded cryptocurrency. And if you look at really, cryptocurrency volume for the past year and a half, Tether has been top three. And despite being highly centralized and lacking transparency, right? So I think, many in this room acknowledge kind of the benefits of a far more decentralized, transparent alternative to something like Tether. But in terms of volume right now, we're still a ways away from that, right? So talk a little bit about your perspective on kind of DAI related to something like Tether, and what gets you potentially where Tether is one day.
Okay, well, there's a couple of things I'd like to unpack from that, if you don't mind. The first one is having a look at the volume that is traded over a 24-hour period. An interesting thing to note is if you have a token with a market cap of, let's say, 100 million, and the daily volume traded is in a multiple of that, it generally is really a bit of a cause for concern, rather pause for concern, as you got to think about it in terms of normal stocks. I mean, imagine if the entire market cap of Walmart was traded in one day. Now, why is that happening? What's the reasoning behind that? And this brings us back to the way that the exchanges around the world are fragmented, and as a consequence, each one is trying very hard to promote itself and induce people to come in and use their exchanges. And without their knowing, or maybe intentionally, there are folks that provide a service that try to help increase volumes on these exchanges. So consequently, the volume that you talk about with Tether, well, we got to try and deconstruct that into that which is real and really is behind actual transactions versus those that are, let's just say, helping the volume look a lot better than it is. So that's the first thing you need to really unpack. The second part, and this goes towards centralized stablecoins as a whole, is the fact that they do hold a very opaque risk profile. So consequently, you don't get to see really what that risk is, as opposed to DAI, where everything is completely transparent. Having a look at the Maker website, you can literally drill down into the actual CDPs that generate DAI. It's almost like casting your mind back to 2008 and having a look at the collateralized mortgage-backed securities and saying, well, what happens if I could go to the bank and look all the way down to the residential properties? Well, in this instance, a decentralized stablecoin like DAI allows you to do it. Now, in terms of scale, well, scale is also a function of the robustness of the space. And if you think about where Tether is, as an example, or even the other fiat-backed stablecoins, there is a simple idea of taking dollars and transferring them into tokens. So it's a substitute. Where in MakerDAO, with respect to DAI, there is no substitute. It's actually an extension of the use cases for fiat-backed currencies like with fiat currencies such as the dollar.
So wash trading aside, I think though it's still fair to say that kind of real cryptocurrency trading, people that are speculating on Bitcoin and ETH in and out of a stable cryptocurrency, Tether is still kind of orders of magnitude more than DAI right now in terms of volume, right?
Oh, I would agree with that. In fact, I would reference Bitcoin directly and say, well, what percentage of that volume is considered to be actually transactionally based, to be so-calledly real? And there was an analysis that came out that, I forget the name of the company, I think it was Bitmain Asset Management, I stand to be corrected though, that reflected that around about 4% of that volume was actually so-calledly real and really supported proper transactions. So that's with respect to Bitcoin. The analysis needs to be extended further to other tokens, including Tether. So the idea here is what percentage of wash trading really is affecting the volume. And to that extent, I don't know. But when you have a look at DAI, because everything is decentralized, you can look at all the trades that's done and said, well, everything on the back of it is clearly real, because you can literally go and check it for yourself. So in terms of order of magnitude, in terms of where we are, well, the one thing that I maintain is that fiat-backed stablecoins, and they will definitely disagree with me on this one, they don't scale. The reason they don't scale is because you're putting a lot of risk on a single balance sheet. To a certain extent, you may even change the risk profile of those entities holding that balance sheet. So I'm of the opinion that we need a lot more fiat-backed stablecoins. They, for me, there isn't a Lord of the Rings kind of analogy here where, one to rule them all. I believe we need as many as possible because we need to get these different risk profiles out there so that users have a choice and they can pick one over the other for different reasons. And that's the same with respect to MakerDAO and DAI. It has a different risk profile, it has a transparency, but it also comes with respect to an architecture that everyone can use. So it will fulfill certain use cases where fiat-backed stablecoins or centralized stablecoins will not.
And one of those use cases seems to be trading on DEXs, right? I think if you look at something like Tether, it's likely that 90% plus of kind of Tether volume is happening on centralized exchanges, right? Where my guess would be with DAI, it's flipped, right? Something like that.
Yes, that's correct. That's correct.
Got it.
But to that end as well, you have to look at the exchanges that have been represented here. The likes of Binance and Coinbase, they have substantial real volume, but then there are others that haven't actually given you a full breakdown of what their volume is in terms of what they consider to be real and not. But again, I'm not casting aspersions. It really is just the nature of the beast right now, and we need to be cognizant of it, or else we'll fall foul of thinking that something like CoinMarketCap is showing pure and reflective numbers, where they're not. You need to actually take the next step of filtering for this particular issue, and then understanding clearly what that time series of prices, what the time series of volumes really indicate.
Okay. So to me, there's really three interesting kind of use cases for stablecoins, and really I see us getting there in stages. I'm curious kind of how you think about this, and particularly like how you think about building DAI for one of or all of these kind of stages, right? So the first, which we've talked about, right, is trading, right? For cryptocurrency traders that just want to stay in cryptocurrencies and trade in and out of more volatile assets, right? That's a clear use case that I think has product market fit to a large degree. The second is decentralized applications that fundamentally need a stable kind of medium of exchange, right? And so something like Augur, for example, which we're going to be talking about later on the prediction markets panel. I mean, Augur, right now, for V1, you need to use ETH. Right, and so if you're someone that wants to speculate on the presidential election, you must speculate on ETH and then the market, right? And so DAI is absolutely needed for for something like that. So that's kind of two. And then three is more kind of this pure medium of exchange. I mean, what got me excited about stablecoins to begin with was in 2013 when I was at Coinbase and I convinced a online jeweler to accept Bitcoin. I purchased my wife's engagement ring with Bitcoin, right? And it was the worst financial decision I've ever made, right? So medium of exchange is kind of this last use case that still feels to me far out, but I'm curious kind of your thoughts on these use cases, and particularly how you think about building DAI for all of, or maybe one initially.
Well, I must comment that your purchase of the engagement ring was the first sense of creating a stable store of value. That sort of increased nicely, so congratulations.
Thank you.
The second component is first understanding that MakerDAO does, to a certain extent, represent the DeFi space. And what I mean by that is we've got stakeholders that contribute towards this protocol, and in order to make it robust, in order for the DeFi space to be robust, you need to be able to lockstep grow this economy appropriately, which means you need a diversified set of use cases, diversified set of stakeholders. So to your point, right now, what are we seeing is a concentration on traders, on leverage traders. And that's great because that's a start, where everybody understands what's going on. But at the same time, we are also focusing on around 300 integrations, of which 160 have already integrated with the MakerDAO protocol. And on top of that, there is about 85% of the space in the decentralized finance space that is literally using DAI. Now, that comes down to the supply and demand function. And as you pointed out, what does that look like? How do we go about making sure that there's always going to be sufficient supply? That is the collateral that we're going to use. That's understanding where ETH comes in and why that has an impact on our protocol, but more importantly, where the demand is coming from. As far as I'm concerned, one of the principal tenets of a stablecoin is to facilitate transactions on-chain, which is the basis of growing any economy. If you don't have that ability, you're not going to see the goods and services. You're not going to see the demand. You're not going to see what I effectively think is the dovetail effect with the traditional economy that your on-chain economy can be. And that's where the potential is, and that's where we are trying to focus our efforts. Going from a more concentrated stakeholder view with leverage traders all the way through to simple transactions where right now you can actually get a Wirex card, put your DAI on it, and go buy yourself a cup of coffee across the road. So everything is we are trying to consider every aspect where demand becomes well diversified.
Got it. Okay. Shifting gears a little bit, there's a lot of kind of different interesting directions to take the discussion around MakerDAO. But when you and I met last year, when you first joined MakerDAO, one of the things I was really excited about is you came from kind of outside the crypto world, right? And you have a more traditional financial perspective. And I've personally found that most of those types of people were mainly just interested in kind of the get-rich-quick aspect of the space and didn't really kind of dive in deep. Mm-hmm. But out of anyone that I've really met, I mean, you've been someone that's kind of just dove in really deep in a lot of different aspects of this space. But one of them that I think is particularly important for MakerDAO, right, is kind of organizational structure and governance, right? And so you joined as kind of president and COO, and I'm curious, just the general state of kind of MakerDAO as a decentralized organization, right? And how has it gone kind of managing a foundation, but also having this kind of, this decentralized organization of stakeholders? Talk a little bit about just the general, approach that you've taken since you've joined.
Well, the first thing that really had to be made clear is that there is a very important asset that the foundation looks after, and in order to allocate that asset efficiently to achieve the objective of bootstrapping the MakerDAO protocol, we need to make sure that that thing was structured appropriately, housed appropriately in the right vehicle in order to achieve our objective.
And when you're talking about that asset is MKR, right?
No, the asset we're talking about is the wallet that holds MKR specifically in the foundation. So the first thing is structure it appropriately, because you need to be able to go into the traditional world. You need to have service providers. As I said previously, this is a reflection of the DeFi state, of the state of DeFi. Folks need to realize that if you want to engage with the traditional world, you need to be structured appropriately. You need to be in a vehicle. You need to be in a structure that your bankers understand, that your service providers understand, that your counterparts understand. And to that end, there needs to be a clear delineation between the fact that the MakerDAO protocol is a decentralized autonomous organization on-chain, where the foundation is set up as a super user. So it's a user like any other MKR token holder, but effectively it's just a super user with the responsibility of helping to facilitate the protocol. Bootstrap it in a lockstep fashion so that we can get demand and supply balanced appropriately as it grows. Because from our point of view, and again, I'm sure there'll be a lot of debate in this, but we think that the decentralized stablecoin is the only one that can really scale. Because MakerDAO's stablecoin, funny enough, is a byproduct. The actual product itself is the protocol. The protocol can be used in the back of, for instance, one of our partners, TradeShift. They're using this protocol as an invoice factoring engine, or they'd like to. And then with respect to banks, they can use this protocol as a part of their payments infrastructure. So it really depends on what you want to use this thing for. So the aspect here is we have a really firm tool that can input or use any type of collateral that will allow us to create whatever kind of supply that we wish to have. So you talk about where are we with respect to Tether, that really is a function of time. Also, it's a function of adoption as well.
So particularly as it relates to kind of managing the foundation, maybe talk a little bit about, I think people are interested in how those decisions are made, right? How are funds allocated? I mean, you had a ecosystem fund that was kind of funding projects in the space. Just talk about that kind of process. And I understand, things have evolved a bit as well. So maybe talk a little bit about
Well, we're at the point now where it really boils down to creating an efficient vehicle that allows you to allocate the resources appropriately. Firstly, internally to achieve the objective. The objective is bootstrap the Make It Our system. You need people in place. You need folks that know how to operate in the regulatory space. You need folks that understand how to interface with legal. You need the complexity of an organization to be able to support the bootstrapping. So that has to be put in place. Policies, procedures, and understanding, but without losing the culture, which is exceptionally important. I mean, we are coming from a place where you have the anarchists and the liberal folks that created this technology. But the problem being is that, generally you feel like a revolution should come with fire and brimstone and then Phoenix rise from the ashes. But in this case, it just came kind of subtly. And we're in a position now where so many people are considering what blockchain means to them in terms of efficiency, value add, structure, and purpose. And when I say purpose, I'm talking about not just corporate, but social environmental responsibility as well. This broader aspect has to be considered and captured within these vehicles. And noting very clearly that these vehicles are just simply tools. So that is what we recognize, and I think is a reflection of the DeFi space as a whole. That yes, there's philosophy, there is a deep sense of where this thing is going, but you've got to use the vehicle to get you there. Especially if you want to integrate with all your stakeholders, including one of the most important stakeholders being the regulators.
Okay, we've only got a couple more minutes. I want to kind of get to a bit of on the product side. I mean, there's obviously kind of a lot of excitement around multi-collateral DAI and the DAI savings rate. So talk a little bit about kind of that and how you see that as important to the growth of MakerDAO.
Okay, so the easiest way to start is think about security tokens. Security tokens is a representation of an asset that everyone is effectively used to. But with respect to the MakerDAO protocol, we're going to start up with multi-collateral DAI focused on ERC20 tokens. So what is currently available? You go to Etherscan, go look at the top 20 tokens, and you've got a very good idea of what might be included. Now, as a consequence, that's just the starting point. That's just getting us from a debt ceiling of where we are now of about 100 million to maybe 200 million. It's a very simple starting point. But what really, is the basis of this is to try and create those tokens that reflect real assets where there is a dynamic ecosystem around it. It's important to add collateral that comes with the demand and supply function attached to it, because that is what will grow the decentralized landscape quickly. If you forget about both sides of the equation, you might find yourself in a situation where you are constantly struggling to control the system as a whole. And you don't want to do that. All you need to do is just consider the fact that this is a part of that dovetail economy from the traditional world.
So multi-collateral is on the supply side, right? But supply side really has not been a major issue,
no,
right? I mean, there's clearly a lot of interest from people that want to speculate on
yes.
ETH to create CDPs, right? On the demand side, I personally think the DAI savings rate is interesting and exciting. And so will the DAI savings rate be implemented in conjunction with the launch of multi-collateral, and how do you view that as kind of also important for?
Well, it's important because it really is a part of the demand function. As you pointed out, obviously you need the supply and demand side. Creating an equilibrium is essential. So the first easy step towards understanding what that demand function looks like is providing a type of rate where you get rewarded for staking your DAI. So the DAI savings rate is a very good component of that. But what is essential is really the transactional ability with DAI. So integrating partners, making sure that with collateral, but also with partners that want to join and use the MakerDAO protocol, they do bring the demand with them. So we have a diversified use case of DAI as opposed to what we have now, which is a slightly concentrated case with respect to leveraged traders. And just to anticipate a further question, what's interesting is that the discount that you previously saw where DAI was trading to $1 is reflective of that regime. And as a consequence, you may find that if we don't control for demand appropriately and it takes over supply, we may find that $1.03 may be the next regime. until eventually we get to a point where it actually gets to be a very robust protocol.
All right. Well, I wish we could talk longer, but that's about all the time we got. So thanks very much, Stephen.
No, thank you.